Hi folks, welcome back to the Amazing Education channel. Today the question is about bonds. So also remember, this is all about the information that you need to know or will benefit you. It's not about the video, because I just have my phone, so it's not amazing video, and it's just for listening purposes, and also not financial advice. I'm not a financial advisor. I'm not a doctor or a lawyer. I'm a master educator with an IQ sometimes over 120, so it's going to really benefit you and the whole world have a better, safer future if you thumbs up and like, subscribe, comment, and so on. Watch all the other videos. We would have a peaceful planet if people just followed the advice on the Amazing Education channel. Now, today the video is about bonds. That's right, stocks and bonds. I'm not a financial advisor, so this is not financial advice, but it's educational purposes for finances and money, how to be financially less worried, independent, and so on and so forth. So right now people are saying, oh, it's a disaster for bonds. Why would you own bonds? And and government bonds, when you consider the inflation rate in the last several months, 2022, this is March 2022, well, the inflation rate is high, and so it doesn't look like a good time, because the payoff of the bonds is less than the rate of inflation. So it looks like, well, that's a money losing proposition. Not only that, but as the interest rates that banks charge, especially the government or central bank, whatever, the rate that it charges for other banks to borrow money, and treasury bills, T-bills, T-bond, treasury bonds, and so on and so forth. As those interest rates go up, if you have bonds right now, that they would have lower interest rates, and so therefore they'd be less desirable. So then the value would drop, and so that's why people are saying, well, it's a disaster for bonds. On the other hand, so I want to provide a second view of this. As the interest rates go up, then suddenly people say, well, you know, that might be safer than an extremely overvalued stock market. So they might expect to lose money in bonds, but they could lose even more, considering that if you look, you know, do some research, do your own research, make your own decisions, and frankly, you need a financial advisor. If you're learning something from this, then you need a financial advisor, so please learn that. That's what wealthy people have, okay? They're not experts, they don't have time. If you have time, you're lucky. So, but what people are saying is, okay, bonds don't look good, but stocks maybe even look worse. They're incredibly high. They seem to be sort of what's called a melt-up, in a melt-up situation in the United States stock markets, where, well, there's been so much terrible inflationary money printing, and people just getting tons of money thrown at them by the government with inflationary quantitative easing, which is money printing, which is lowering the value of the dollar, increasing the prices of nearly everything, causing the inflation, and also causing the rise and inflation of stock prices. This is going to soon end, and people expect a huge crash to basically cause a recession, because then people will stop spending money and inflation can stop its very bad rise. That's at least that's the hypothesis. But if they keep printing money, inflation will still be there. It will just be delayed, and the wealthy people will get the benefit when they keep printing money and making it available for business loans. And this is probably what's going to happen. So, but however, that still means, as government raises these interest rates, that there's probably going to be a huge bear market, stock market crash. Probably things will end up in the next 5 years either the same or down perhaps up to 60%. Could be 80-90%. We don't know. So, but it just seems very likely because of historical overvaluation situation right now. And so bonds may be better. They might not lose as much. And people, when stocks start to fall in an emergency type situation, then bonds could go up because people shift over there. They say even the sort of blue chip or very reliable stocks and companies still are incredibly overvalued historically. Yes, look it up, do your research. And so therefore, I don't want that. I want something that's going to be safer. And so what could be safer? Well, maybe bonds. And it's just likely that people are going to try that out, and there'll be pressure. And so instead of the bond prices falling, which they might do, I mean, it always fluctuates up and down all the time, but if there's somewhat of a bear market, which means usually a 20% drop or more in some stock markets, overall aggregate index, whatever, over a period of time, or crash, which would just be that happening faster, like 20-30% or more. So then people would get scared. And so there you go. Maybe bonds are not so bad after all. That's why financial advisors say, well, the closer you get to wanting the money in retirement, then you should have more bonds than stocks, because they don't move completely together in sort of a lockstep, But as I said before, neither of them are really good right now, and people are recommending maybe 20-30% of your portfolio of retirement investments in stocks or bonds. Maybe you should have cash, and also if you're a Warren Buffett type investor, the wealthiest investor in the world, sometimes the wealthiest person maybe, you wouldn't care about these things at all. That's another perspective to take. You would just be looking for good companies at incredible good times to buy. And if you could find it, I'm not saying you can, because with the extreme overvaluations, maybe you can't, and maybe that's why you would have cash. But I'm just saying, I wouldn't discourage you from buying, like, for example, a year or two ago, when things were still as overvalued, about the same as it is now, people bought Tesla or some other companies, maybe Apple or something, and those did very well, extremely well, maybe 300% gains, So it's not just the index, it's not just the entire market that you need to look at. Also look at management and decisions and sales and all that. And so you may need to learn a lot more, educate yourself a lot more, and you could do very well. But most people who invest in individual stocks, if they're not an expert, if they don't have financial training, they need a financial advisor. So you could become a financial advisor, maybe get training, get a degree, go to college in finance. Those are some of the highest paid people on the planet. In fact, a finance degree is probably the highest paid profession or degree that you could find, because you're an expert in money. So what could be better? And you could work in banking and investing and so on. But there are other things you can study and become a financial expert. You can just look into it, study on your own. You don't have to go to college if you're an adult already working. It might not be worth it. Although it could be, but maybe not. So you might want to look into that, and you could do really well. But So it's a very interesting time right now. So thanks for listening, and do your research, and thank you very much. Be careful of stocks and bonds. Oh boy. Now, on the other hand, to give you even a third perspective, because predicting the future is so hard, now could actually be a low valuation. Things may just boom. We might have amazing technology and innovation and productivity for unknown reasons, and this could be, although appearing to be overvalued by historical standards, and actually a low value, and so the companies and stocks might just go up and never have a major crash for another 1, 2, 3, 4, 10 years or decades. It's all, it's sort of predictable, but not 100%. It's not reliably predictable what will happen. So keep that in mind. Don't set your brain in stone that, a certain thing is going to happen. For example, that bonds will go up if there's a stock market crash. There's no guarantee of that, because as I said, it looks like there's sort of a negative earnings. You're losing money owning them, and if you just hold them. So okay, but take care.